Okay, take two. Número dos. Alright guys, how we sounding now? Are we loud? Are we clear? Alright, beautiful. Beautiful. So yeah, as I was saying, any market you're in where you pull up the heat map, S&Ps are magenta, QQQ's magenta, small caps magenta, the Dow's magenta, the RSP, healthcare, semiconductors, financials, and then the VIX and the dollar are bullish. They got the blue background. Until that changes, and we'll check this on a daily and a weekly basis, especially during that Sunday session. Until that changes, you're in a short the bounce kind of market. I want y'all to visualize what the heat map would have looked like back in April, May, June, July. Everything would have been the total opposite. The indices, the sectors, they're blue. Momentum's bullish, structure's bullish. The dollar and VIX, they're dead in the water. All kinds of pink. So point being, not too much has changed here. And if anything, we're getting a little bit of a bounce. With a little bit more patience, we're shorting into that bounce. But I'm showing you this to kind of show you the view from the top down. Now we could even turn these into weekly charts. So the scores here off the weekly. The bulls do maintain a little control here on the weekly. So it's really big that they continue to defend that. If they can't defend that, that goes magenta. Now you're even more so looking to short the bounces. So same thing for the QQQ. So you've got Mama and Papa. And then you have the rest of the market. Weekly for the small caps magenta. Dow is magenta, RSP. The financials, healthcare. The semis are still hanging in there for now. The VIX and the dollar, both bullish. So we'll see how this continues to progress or worsen. Right now, I think the game plan based on the daily time frame, for me, it's pretty clear. Structure is busted, momentum is busted. You short those bounces. That gets amplified. The aggressiveness of which we look to short the bounces gets amplified. If the weekly charts get on the same page, like, yeah, we're probably going lower. Beautiful. Now everything from a 5-minute up to a weekly chart says get short. And then I'll show you both here for the FANG stocks. So daily charts for your big boys. Apple, Amazon, Netflix, Google, Nvidia, AMD, Meta, and Tesla. With the exception of Meta, everybody's magenta. Just take Apple, Tesla, and Google alone. Actually, let's swap out AMD for Microsoft. All right, Microsoft's magenta. These 1, 2, 3, 4, 5, 6. I mean, pretty much these 8 names right here. Collectively, they make up a little bit more than 20% of the entire S&P 500. In a lot of ways, you're looking at the market. Yeah, there's energy, there's healthcare, there's financials. These 8, as far as the weighting goes, they're more important than the others. So when these backgrounds are blue, that tends to have a more positive impact on the overall market. Amazon's moving and grooving. Netflix is taking out the highs. Apple's strong. Usually everything's good in, all is good in paradise. They're all magenta. So it's not only an issue for these stocks, but being that these are the big dogs, it's a problem for the whole market. And then the weekly scoreboard here for the FANGs. Whoops. Let us take a peek. Apple's magenta. Amazon still blue. Google, Nvidia, Meta, and Tesla still blue. I think every week we have to come back to this heat map. Everything's pretty straightforward on your daily charts. Amazon's weekly goes magenta. Google's weekly goes magenta. These start dropping off. Just not great for mama market. All right, so there's your scoreboards, and then pull up the see. All right, so one thing I did want to show you here, and we're always trying to think in terms of probabilities. Day trading, swing trading, we're doing big fat iron condors. Everything's based on probabilities. The unfortunate thing about that, when you use the probabilities to your benefit, it's awesome. I've got a squeeze, I've got buy signals, I've got a good market, I buy calls. The odds work in your favor. Sometimes respecting those probabilities as a swing trader means there's just no trade. The temptation is there, and it's a temptation based on emotions, not the odds. But sure as hell, there's a temptation when you're taking out Tuesday's low. Everything's dumping. Right, the ticks are at minus 1,000. Everything's just nasty. Easy enough to say, you know what? We're going to the daily 200. We're only about 20, 30 bucks away. This market's about to puke to the 200. You throw in the discipline towel. Right, we know getting short down here is not a great idea. That's a great entry. You short it here, that's an okay entry. That's a crappy entry. That's a really bad entry. That's just a shitty entry. But as a swing trader, there's always this desire to do something. Like, man, if I don't have a swing trade on, I'm not doing my job. Right now, probabilities tell us two things. One, this ain't the market to get long. All right, you get cute, you buy calls, you sell puts, you hold it overnight. Easy enough to get caught with your pants down. Oh, well, we're so oversold. We're so oversold. I'm going to buy some calls here, catch that bounce. Well, oversold turns into more oversold. And then we're a little bit more oversold. We're a lot more oversold. So we already know by default, buying a bunch of calls, selling a bunch of puts, and then going to bed. Yeah, that works great back here. It's a recipe to wake up and lose a lot of money in this market. Still doesn't mean we should short it. Right? It's not always one or the other. Alright, I got sell signals, so therefore I'm shorting it. Probabilities would tell you, getting short down here, 7 times out of 10, this happens. They take out the low, and think about how much of the action here is just driven on emotions. Everyone's getting freaked out. Oh my goodness, the market's pulling back. They take out the Tuesday low on Wednesday. Dumping towards that daily 200. Everybody gets roped in. Come on in, the water's warm. Come buy some puts. Now that can work. Right? There's going to be times where you can get short at minus 5 ATR, walk away with the paycheck. Think of the emotions, though. Of anybody who got short Wednesday morning, by the time the market closes, they're already underwater. They take out the low, they rope you in, and then they pull the rug out from underneath you. So anybody short's going to bed on Wednesday, like, all right, that wasn't any fun. Let's see if things can break back down tomorrow. They're sitting there all day yesterday, right, feeling more pain. And then same thing here today. So I think the best thing that we've done this week as far as swing traders, right, the best swing trade was no swing trade. You get short here, maybe we're catching the 200, or maybe we're catching a rally all the way back to the 21 EMA. Right on the chin, right on the kisser. You know what really, really sucks about that and what really stings? Aside from the financial loss, now I'm getting my butt handed to me on the very rally I should want to be shorting into. The market's saying, hey, here's your pitch. Right, we're up here 4350, 4400. I'm in no position to take advantage of that because I'm over here licking my wounds. So it's no different, guys, than a more bullish market where you're waiting to get long, At some point, you're done waiting. You throw in the patience towel. You buy it up here, and it's like crap. Every day that goes by, we're going lower, you're feeling that pain. As a swing trader, you should be saying, come on down. Like, please just come down like a little bit more, and then I'm going to scoop you up. You should be seeing the beauty in the potential flush versus that flush handing out a bunch of pain. In this kind of market, you should see the beauty in these rallies. And this one's not all that impressive as it currently stands. But y'all get where I'm coming from. Any money I could have allocated to a short down here, I'm saving that. I want to get more. I want to get heavily short up here. So I'm going to save those chips for a better day. So with all of that being said, taking out that low and then popping it back above, this feels like the bull's best chance to try to get something going. Right? Anybody who got short, they're kind of backed into a corner. Now we know the influence of our bigger time frames is not great. So in these bearish markets, the rallies back to your 21 EMA, the entire focus should be the lower time frames. Like, you're not going to get any clues from your weekly. You're not going to get any clues from your daily. If the bulls are going to get it done, it's a lower time frame thing. So one thing I do want to show you here is the hourly. And you want to look at it from two perspectives. One, where's a level where they've kind of dropped the ball? Like, they got a pop going, and now they're kind of giving too much back. I would say if we dump back under 4,300, then maybe that is all she wrote. You also want to look at it from the perspective of Rome wasn't built in a day. Meaning as soon as things bounce, right, and then they dip a little bit, it's easy enough to sit here and say, oh God, let's get short. Like, this is it. This is the push you've been looking for. It might be, but we're still pretty far from that daily 21. Right, Rome wasn't built in a day. And if the bulls are going to take it higher, a lot of times that's not going to happen in a day either. So what you're looking for is just signs of progress and structure and momentum, and then whether or not the bulls give that back. So just a few things here on the hourly. Momentum's improved. Back above zero, they're keeping it back above zero. Like, see that cute little attempt back here? Like, right? Momentum goes, and then right back down. This seems maybe a bit more sustainable. So they fixed up momentum. They canceled out the sell signal. For now, they're keeping price above the hourly 21. This is not a, rip your face off short squeeze. But this is progress in momentum and structure in comparison to the last handful of weeks. Now, can they keep it and can they build upon that? Back under 4,300, they haven't really done too much. If they can just keep it around 4,300, right, stabilize things, anybody who got short back here, they're still feeling some pain. Right, anybody who got short on Tuesday, Wednesday, they're praying for the market to collapse. Like, every minute that goes by that we're not heading back down towards the dead low where they got short, it's painful. And I've been that dude before. A lot of us have probably been that guy or girl. So the bulls even just keeping things stable, it's a little painful to the shorts. And that if next week they can build on this progress, let's get an hourly buy signal, let's maybe get a 2-hour buy signal, then they can take it higher. All right. So with that kind of view, 4,300 is kind of a big spot here into the weekend. If they can keep it above it, I think they got a shot at trying to take things a little bit higher next week. Right, they maybe got the Bears on their heels here. If we just slice through it like hot butter, then we're probably not going to go too much higher. So it's a tricky spot as far as that goes. While we're waiting for a bit more clarity, okay, my Keltner channels are way off, so let me fix that. But here's what I'm thinking. So while we're waiting for a really nice, juicy swing entry, and keep in mind, there's nothing wrong with just waiting for that trade. Wait until we have a daily squeeze. Wait until we have a really good short entry. I know of a few really good traders. There's times where they don't trade for months. Like I'm sure a lot of you have heard of Mark Minervini. I think there was a point where he didn't put on a trade for like a year and a half. I don't think you've got to go to that extreme. Hopefully the market is better than that. But point being, as a swing trader, the art of swing trading is a lot of times you're saying no to everything that comes across your screen, and you're waiting. I don't hunt, but it's probably a lot like hunting, or a lot like my experience with fishing. It's a lot of waiting. In the interim, I'm kind of digging these condors. I've kind of grinded out my weekly goal this week by doing the condor with all of you, condor in the options room, and then another condor. Right? None of it was exciting. None of it was sexy. I'm not going to go to the pub and brag about the trade, but a couple deposits towards that weekly goal. If anything, when we get back up towards that 21 EMA, I've got a little bit more cash to attack that bigger swing setup with. So what I'm thinking, and I'll be here today. I'll stay home. We'd want to wait until probably a half hour before the close. So I will send this out. But the condor we did this week was based on them quant pivots. They call them Carter quant. So what we can do towards the close, show all periods and show projections. There we go. So next week's L2 and H2 level, it's going to be based off of today's closing price. So right now, if the market were to close, just closes right here. Next week's H2 is 44.05-ish, 44.10, excuse me. And next week's H2 is 4,200. So you probably try to put that short put maybe a couple strikes under the 200 SMA. But same scoop as this week. There will be a 90% chance that we close somewhere between those two levels. My favorite trade in the world, always has been, always will be, I've got a squeeze, I've got a sell signal, I've got a great entry. A part of me, just personally, in my own trading, becoming better at that setup, is having things that kind of fill in the gap in between. Now I'm really trading that go-to setup when it's available, when it's clear, and when I've got the edge. A great example, guys, would be, keep in mind, it's always a little tougher in my position because, y'all are here for trade alerts. And now, now JP, was it JP or Johnson and Johnson? JP Morgan. All I'm trying to say is it's so easy to say, man, I'm dying to put on a swing trade. I'm a swing trader. I have to swing trade. All right, here's JP Morgan. It's an A+ setup. Squeezes, sell signals. But if we're short in that at any point this week, we're doing that in a really oversold market. All right, the art of swing trading is you're trading nothing but A-plus setups, but you're doing that in alignment with the market. Anytime you can short something like JP Morgan and you've got the wind at your back, meaning the S&Ps are pretty much setting up for the same exact move you're looking for, I don't think there's a better trade. I really don't think there's a better trade. That squeeze-based trade, the edge comes from your signals, the edge comes from, this is market, give me the thumbs up. %80 of that game is waiting for that pitch. So like I said, I don't think anything wrong with, doing nothing until that trade comes around. I know a lot of folks who do exactly that. My goal being as much account growth as possible. That's where I'm liking things like these condors. If I have to wait another 2 weeks until I can put on a trade where everything lines up, I'm putting on 10, 12% of my account, the kind of week where I can make 10, 15%. If I can slap on a couple of these bad boys per week, grind out a steady 2%, it's not a bad gig. It's not a bad gig. So like I mentioned, we'll wait until like 2:30 Central, 3:30 Eastern, get a sense of the projections for next week, and then we'll throw on the condor. The swing trading plan would be, if they can keep this puppy above 4,300 today, they've got a little bit of a trap dynamic. If we can see it a little bit higher next week, we will start to put on some shorts. I think the easiest trades as far as just simple, short the S&Ps in the bounce or short the QQQ. As goes those two, goes most things out there. But alright guys, before we do some Qing and some A-ing, let's just fire up the bear scan and make sure we're not missing out on any gems here. JP, GILD, ADI, O'Reilly, KMI, CMI. Like nothing all that chunky. Where's my Amazons, my Googles, my Netflixes? We'll get them here eventually, but not at the moment. So that's the trade I would like to take. Try to see them take it a bit higher. Wait for things to stall out. Then put on the shorts looking for the ultimate move down to that 200 SMA. I think the self-fulfilling prophecy right now is that we are going to come down and test that level. The short for that is just so much juicier. We're putting it on somewhere in that neighborhood. But all right, folks, let me see what you got for questions. We'll bang those out, and then I'll have you on your way. Anybody got any good weekend plans? We traveling? We partying? We doing family stuff? What's the move this weekend? All right, Danny's going to be a good dad and pitch to his kid. I like that. He will not forget that, my friend. Christopher, can we share the Fang scoreboards in the room drive? Yeah, when I jump off the mic, I'll throw that up there. Let me, where's my notes? Add scoreboard to room drive. Consider it done, my friend. Stick's got some football and beer. I'm thinking football and wine. Unfortunately, I can't do the beer. PK, ES Weekly. Let's see what she's got. Is it just me or the chart's slow? So the good and the bad of the weekly. The bad is this is week 2 under the 21. What that's going to do is continue to drag momentum lower and lower. Meaning if they can't quickly pop it, kind of get a little lift here in momentum, we might see the first negative cross since November of last year. Now to your point, PK, yeah, nice hammer candle. So I think you take that weekly candle, and then, to me, the biggest thing here was Wednesday's price action. And to me, it sticks out because I've been on the wrong end of that a lot of times. They take out a low, you jump in and get short, and then it's just like 3 days straight of damn. And the more it continues, the worse it gets. So I think there's a chance they can try to work it higher next week. But all the signs point towards that would not last for very long at all. Okay, SPU as well. Chris is flying to Idaho. Have a safe flight. Here you go, Steve. I don't see anything wrong with that. Baidu Mike, you're short the MRK 105 puts, and every time frame has negatively stacked DMAs. Do I think October is a reasonable target? Do I think 100 is a reasonable target for October? Let's put it this way. When the daily squeeze has just fired, you're only 3 days in, and you're still coiled up in a 2-day squeeze and a 3-day squeeze, it's not tough to think the stock could go another 2 or 3% lower over the course of the next 3 or 4 weeks. Now my question to you, and just something to consider, would be that if you're getting short anywhere back here, you've caught a really good trade. There's our blue label down there telling us here, kind of like coming up on a really good target. So manage it how you see fit. Just what I would do here. And again, the real kicker right now is the S&Ps might have a shot at a little bit higher. So if the S&Ps are oversold, there's even a tiny chance of a little bear trap having been set, and you already have short profits. It's a good time to try to pay yourself some way. So one thing that I would potentially do here, if I shorted it back here, and I caught this beautiful move lower, if I'm thinking there's room for a flush down towards 100, just to make the math easy, at this point, if I'm up $1,000 on my current trade, I'm going to close that trade before the weekend. I'm going to close it right here. I'm going to take my $1,000 of profit. I'm going to then go a couple weeks out to expiration, and I'm going to buy $200 worth of that 100 strike put. Think of what we did on AMD. We caught one flush. Alright, so trade one, we take the profits. And now on the bounce here, we take a little bit of the profits from trade one. We got short again. And now since on trade two, you're risking a percentage of your profits, you can get a little bit more aggressive with the strikes. Now you're buying some cheaper out the money puts, and you're in a great position. If AMD gaps up and explodes, the cheaper puts are going to zero. Between the two trades, you have a net profit. Our second trade made money, so we cashed out on the second trade. And then on the next bounce, we did it again. All right, the third trade expired worthless. Between the three, we walked away with a nice profit. Now imagine if AMD just continued to work and work and work and work and work. You kind of keep doing that until one of the trades doesn't work. So that would be my thinking here with any short position. Even if I think there's room to go lower, I gotta respect the fact that markets are trying to stand their ground at a level where probabilities-wise, you've probably seen the easy flush lower. I'd take my profits. I would take a percentage of those profits, right? Ideally, maybe no more than 20, 25. Go a couple weeks out. Buy those 100 strike puts. Now either which way, man, you're golden. MRK gets a huge upgrade and gaps up to $300 per share on Monday. You'll wish you had calls. But between the two trades you're still net profit. This continues to walk down, walk down, walk down. Cherries on top. That makes sense? Ooh, Canelo versus Charlo, that's right. When's Fury versus Ngannou? Or did that happen? Anil, no, the quant pivots are SJC's indicators. That's totally separate. What I would advise y'all to do, though, if anything, though, is just watch the webinar. I think the link should be somewhere here in the alerts. Let me see. Yeah, if you scroll up into the alerts from yesterday, I have the link for the webinar he did. If anything, just watch that to get a good understanding of it. That way, later today, if I smack on a condor, you kind of understand where I'm coming from. And I'll be the first to admit, when I put it on, it feels like the lamest trade possible. Like, yo, am I really doing this? Like, is the squeeze guy really about to put on a condor? But, the one that we did, and like we talked about earlier in the week, next week I'm going to be posting, and we'll start today, I'm going to be posting position sizes with the trade alerts. The way that I position size that SPX condor, that one trade made me a little bit less than 1%. So, yeah, a couple of those per week. You're kind of at that baseline 2-ish% goal. Then the weeks you got all the squeezolas, you try to blow that out the water. Bruce, CHA for a short. That's how people pronounce car in Boston. CAH. It's a beautiful looking short. I'd short it in a fashion where if the S&Ps go a little bit higher next week, you can kind of comfortably sit through a bit of a bounce here. Right. Above 4,300, I think that's in the cards. And, I'll be the first one to say, hey guys, I was dead wrong on that thinking. But if that's how it plays out, right, to be determined, but if that's how it plays out, take out the lows, trap the shorts, keep it above 4,300, squeeze them out a bit more, then there's just a good chance that anything you're currently short, anything you want to short, it might go higher for a few days. I don't think it'll last for weeks on end, but any short I took today will be done in a fashion where I'm taking that into consideration. If the S&Ps are up here, I'm putting on a much bigger short and I'm structuring a much more aggressive trade. Couple weeks till expiration and I'm just buying the puts. If I want to short a name today thinking, market might go higher for a little bit, maybe a bit more time till expiration, maybe a call credit spread. Or maybe I still buy those puts and I'm just scaling down my size. Young, what happens when the daily quant pivots and the weekly quant pivots fall on the same date? So Friday, like a day like today, right? I think you just want to compare probabilities. So weekly H1, H1, H2, L2. About a 90% chance we stay between those levels. Right. In other words, about a 90% chance you're not going to trade above H2 or below L2. Right. Those are the odds in your weekly numbers. So as far as who holds more weight, I would just compare the odds on the on your daily levels. So weekly we're seeing there's about a 90% chance to contain between the two extremes. Over 293 analyzed periods. We're in between the daily extremes about 80% of the time. So there's a 20% chance we're going to break a daily H2L2, and about a 10% chance we're going to do that off the weeklies. So like most things, the bigger the time frame, the more weight it can throw around, so to say. And there have been a handful of times this week that the daily extremes have been broken. The weekly, however, never got tested. Down yonder at 4,200. Yeah, Mike, so the ideal time to do a condor is when there isn't a squeeze. I think the worst time to do a condor is when there is a squeeze. Now, when does a condor work great? When the stock is squeezing. When does a condor explode in your face? When the squeeze fires. So even back here with a squeeze that lasted for 2 days, as it goes from compression to expansion, if you're trying to play that chop with a condor, which visually might look like the right trade, like, we're just chopping, we're just stuck. Well, you better hope that thing doesn't fire. Or you're doing iron condors back here. Like, better hope that thing doesn't fire. What a squeeze can lead to is a bigger than expected move. In the absence of a squeeze, we tend to stay within expected moves, right? Especially on a weekly basis. So the absence of a squeeze actually favors something like a big wide condor. We're not building up a bunch of concentrated energy here to head in one particular direction. All right, they spanked it, it's oversold, little dead cat bounce action. So that's my thinking. If you have a squeeze and you slap on a condor during the squeeze, you are playing with fire. Depending on time till expiration, your strikes, all that good stuff. Think of what John teaches in Mastering the Trade, which, in essence is the beauty of the squeeze. 80% of the time, we're getting this crap. Flush. 20% of the time, you get a daily squeeze, you get a concentrated directional move. Squeeze ends, and we're back to the chop show. Great question, really good question. C-dubs have to take a look at XOM. And let me cut the recording off here since we're just kind of doing some Q&A stuff.